Good afternoon, everybody, and welcome to this edition of our Indices, Commodities, Foreign Exchange, and Crypto webinar. Ask me anything. My job is to give you my best technical analysis and hopefully just some experience from having been through many a market cycle. I can assure you, my name is Carl Capaligo. If you don't know who I am, I'm the ThinkMarkets analyst over here in Australia, and it is a pleasure to join you as we go macro. We start at the top, see what's going on in the world, and hopefully that'll give you a better idea on how to trade some of those markets, but also how to manage your portfolios if that's what you'd like to do. Over to you now. Find the Q&A window somewhere on the Zoom window there. It's where most people tend to be. But if you happen to be watching me on any of the streaming services, so YouTube, Twitter, LinkedIn, Facebook, feel free to ping me any which way you can. I'll give you my best technical and fundamental reader on that particular chart. Talking about charts, let's head over here to the Amy Broker screen. I've got a mix of charts in here and another platform I'll show you in a second, and also through the ThinkMarkets web trader as well. Just looking at the NASDAQ composite to kick us off, probably worth starting here because it is a reflection on that risk on, risk off theme that has been plaguing the markets ever since the collapse of Silicon Valley Bank. What does that look like? Maybe that's another interesting place to start. So bear with me here as I change the screens. Hopefully that one's going to appear, and if it doesn't, I have a trick to make it appear. Don't worry. Here we go. I thought I remembered everything, but might have missed one thing. Okay, so I want to go here, and this is the trade view window. I've got a few extra bits and bobs here that I can show you, and we're looking at the Silicon Valley Bank chart. So this is what roiled markets initially. You had a bank there that lent money to your Silicon Valley startups. The venture capitalists, the hedge funds that invest in them, tended to have a small deposit base, and the deposits it had when interest rates were very low, it needs to invest those somehow. It invested them in interest rate securities, which when Jerome Powell was reappointed, went on his big crusade against inflation and caused the prices of those securities to collapse. Then we had a bit of a run on the bank from some of those key venture capitalists. Peter Thiel is a name that comes to mind, and that caused there to be a mismatch between the firm's assets and its liabilities, and therefore they were forced to realise the losses on those securities and caused them effectively to become insolvent, for want of a better word. The FDIC, the Federal Reserve, the SEC all came in to guarantee the depositors. So the FDIC guarantees all deposits anyway below 250,000, if I'm not mistaken, and basically they said everyone will be made whole above or below that number. If you owned any of the firm's debt, you're waiting in line to see if you can get something back. It might be cents in the dollar. If you own shares in what we see on screen, you get nothing. That is the bane of the equity holder. They stand last in line when things go bad. What I would suggest here is just a broader technical analysis theme. And I know we're not talking about indices, commodities, foreign exchange, or crypto just yet, but it goes for anything. I would say if something's in a long-term downtrend, it's probably not a smart idea to be buying it. If anything, you'd be looking for shorts and looking for the timing of those shorts. And the timing of those shorts tends to come around when the short-term trend realigns with that long-term trend. So on screen, very clearly here, we can see my long-term downtrend in place. If you're not sure what they are, that's my 144 and 233 exponential moving averages. Exponential moving averages because they just move faster. Moving averages are a delayed technical analysis tool. They slow down the price action. They dumb it down. They make it less sensitive than just reading peaks and troughs and candles. But what they're good at is giving you a very quick picture as to what you need to do. It's sometimes hard to read the price action. Those peaks and troughs can be really tightly packed, but visually, how clear is it? It's clear as day, that dark pink zone. Not only is it dark pink, just the color of it compared to the green in my traffic light system, or the orange, which is amber, hey, be careful, think about getting out. And you can just see how well my traffic light system works on this chart. But it's the size of it as well. So when it's very thin, it's just being established. As it starts to expand, it's growing in strength and magnitude, that trend. And we can see it was very wide actually and expanding just before the collapse. So sure, if you're a fundamental analyst, you might have missed the mismatch in the bank's assets. But if you're a technical analyst, it would have been no surprise to you that this bank was potentially in trouble. And we can see the realignment just prior to that of that short-term trend, again, going through that light green zone into the amber zone, and maybe even switching to pink just before the collapse. But there are plenty of opportunities within there to get out of this investment, saying, hey, look, this is probably not the right place to be. I mean, really, it started to have significant problems back in January 2022, started to lose its uptrend even earlier than that, and was in a clear downtrend by early 2022. But with that in mind, I think that gives us a nice backdrop within which to focus our attention on something like this, which is the NASDAQ chart here. And we can see some similar themes. We can see the dark green zone. If we scroll back a bit on through the uptrend there, and this is where we are happy to skew our risk levels towards exposure or having more exposure. I won't talk about whether that's a portfolio of stocks or investments in any other risk-on focused assets to the long side. You can see how the traffic system works. I just want to get back to really the start. You can see how the trends change and ebb and flow, but it's pretty clear here. Green is go, orange is take some time to pause, and then pinks stay out. So the NASDAQ is in a well-established long-term downtrend, and therefore you should be cautious. I think this idea that we should be having a lot of risk on the table right now is foolhardy, and we say in choppy markets, traders get chopped up. It did flash somewhat of a buy signal through here as it pushed through that long-term downtrend and attempted to change it. Circumstances have conspired to cause that attempt to fail, and really, with the short-term trend ebbing back towards the downside, long-term trend established in the peak price action here, lower peaks and troughs are in place, and all but the last three white candles preventing this from much lower levels. I would say as long as 10,982 holds, there's some hope. There's a glimmer of hope, but it's nothing more than a glimmer that we can go up and push to higher prices. And, it's from a glimmer, let's face it, that a bull market starts. It has to start somewhere. And let's see how we go. Above 10,982, I think we're okay. Beneath that, all bets should be off, really, to the long side. And we are very much re-establishing this bear market. It's far more stubborn, perhaps, than some had hoped. So I think what to do here is pretty clear cut. I don't think there's any confusion there, just as I don't think there was any confusion on Silicon Valley Bank. Looking at a couple of the other US indices, the Russell 2000, I haven't updated my little bits and pieces here, but it's you can still see we are short-term downtrend, long-term downtrend as well. Lower peaks and troughs initially to start the process of moving back into equilibrium after this January push, and then a complete failure through here. Whilst the NASDAQ has those three really interesting white candles, the Russell 2000 doesn't have them, but it does have some support through these lower shadows through here. So the only way you can get a lower shadows if the price moves down during the trading session and is pushed back up by excess demand in the system. Okay, I wouldn't say the excess demand is convincing. It's far from it, given that we're still left with black candles by the close. In fact, we've got an equally and oppositely charged upper shadow through here. And I would say that the Russell 2000 is far more precariously placed than the NASDAQ. And that's important because we're looking at the 2,000 smaller stocks within the US indices. I wouldn't say they're small by Australian standards. Many of them, within the top 100 of those 2000s would probably make it well into our ordinaries index, but small by US standards. So it really is where the rubber meets the road in terms of the US economy, and you really must pay very close attention to what the Russell 2000 is doing if you want to know if there's going to be a deep and protracted recession down the track, or there is going to be a soft landing. Right now, that is not pointing to the latter. It's more of the former. So we've got a pretty good grip on our indices at the moment. Barry's asked for a checkup of commodities as an obvious place to go next, isn't it? Because if we are seeing strong economic growth, that means higher consumption of our base commodities. So we can think of something like crude oil would be an excellent place to go. That, in fact, is Barry's request. Now, I wrote an article. Let me get to the right screen for you. There it is there. That's the price of crude oil. We'll talk about that in a second. But I wrote an article, not that one, Silicon Valley Bank turmoil. In here, is the big energy trade of 2023 just beginning? And I made sure I put is and a question mark at the end of it. I deliberately didn't put the big energy trade of 2023 is beginning. Okay. I covered my backside because seasonal patterns are, I think, an excellent way to try and interpret the market. So try and interpret a trading idea you might have within those seasonal patterns, but they're not written in stone. And we can see that February, March, April, usually a pretty strong seasonal time for West Texas Intermediate crude oil. And in this article, I go into some of the reasons why that might be the case and some of the, historical factors there and therefore what we might want to do about it. Not turning out that way for the crude oil chart, as you can see, and I think those seasonal factors are being overridden by the broader risk off move and the fears that if we do have a period of uncertainty in banking, that the bankers may pull their heads in. They're going to limit loans and the flow of credit through not just the US economy, but potentially as a knock-on through the global economy. And let's face it, businesses who consume oil, they often, not in all cases, but many of them feed on that credit to just keep the business going, to expand operations, to create that new factory that uses that little bit more energy. So that is the problem, I think, for crude oil at the moment. Putting all that aside, I mean, that's fundamental analysis, that's macro analysis. If you like that sort of thing, the chart tells you the story. It was in a long-term downtrend prior to the recent push down. We can see how the long-term trend changed after the Russian invasion of Ukraine. We obviously had that spike, moved back more to equilibrium, again, as interest rates really were ratcheted higher, undermining that global growth story. We move into the orange zone, which is not always a bad thing if you can break back out of it, but we didn't. We failed, and then we failed to reclaim it. And that's usually a very poor sign for that a trend is sustainable to the upside. In fact, we did see the break into the downtrend. Short-term trend wasn't too bad. It was flip-flopping orange and pink. Certainly no reason to get too excited. And really, I think the last time we covered this, we had a number of 83.36, I want to say, which might be around there. In fact, it is that high there, 83, that says 34, but if I find the exact high, it'd be 36. And we said until crude oil closes above that, there's really no reason to be in longs. And then I would have given you 70.08, I reckon, or 70. Yeah, in fact, I'm very good. 70.08. There it is there. Close beneath that would actually push you into shorts, and that's where we are now. Are there any redeeming features on this chart? Is there any indication from the candles that we're likely to see a big influx of excess demand? No, there isn't. In fact, really all I can see there is supply very much in control of the price and demand. Happy to wait for lower prices. A little bit of a lower shadow last night, maybe a little bit of speculative buying, but because we didn't even close above the midpoint of the candle, you have to then assume that supply is still in control of price. Interesting build up in volume. If we do see a big spike in volume on a big blow off in the downside price movement, so that is a long lower shadow, that could punctuate a significant low, but until we see it, there's no point thinking anything else but short on that one for you, Barry, sorry. But Barry does ask the question, if US oil keeps going down, is this a disinflation thing? Yeah, absolutely it is. Look, the other key factor, of course, is the natural gas trade, which I know we will want to talk about today, but it's one we're watching quite closely, not just on those seasonal factors. If we head back here and have a look at the seasonality in the natural gas market, we're seeing, again, March, April, May, usually a pretty good time of the year where utility companies are restocking after their winter drawdown. It's a little bit counterintuitive if you think they're going to have lots of need for natural gas to power power stations, electricity generation through winter months. It's actually not the case, and it would be a disaster if they were going to the markets actually during those months, because it would mean they completely got their forecasting wrong. So they tend to build up those reserves, obviously, in advance. You're a utility company, you have to keep the lights on. You can't take that risk. So you're building up your stockpiles in advance of Northern Hemisphere winter, and then you tend to draw down over those months because you tend to overstock, don't you? And it makes sense why you would. And then you tend to start to stockpile again for summer. Why summer? Well, we need to keep cool as well. So that's usually the story there. I think this one looks better than crude oil, only in that these candles through here, the low shadows, the white candles, the fact that we haven't really pulled back too far into that range, I think we're still probably about 50% from that range, suggests that there is some latent demand in the system and a bit of short covering around. Not enough to trigger a long, and I think until you see higher peaks and high troughs on this one, that's not what I wanted to do. I wanted to pull the screen that way. So what we would like to see, we'll keep the arrows going, something like this. So potentially where we even go up and test this little high here, and a pullback, and then the right candles in that zone would be what we're looking for. And the candles we're looking at there are the white candles with the long lower shadows. So that could be a path to a long trade in natural gas, which I think could be quite good, actually, targeting into that sort of high 480s to $5 level. And with stops hopefully set sort of around 250, I think you'll make the reward to risk work on that one. Look, I call it the kamikaze trade because you are going against the long-term trend, and really you're adding, say, a third if you get the right candles in here, a third on a close above that, and then you might have another third on the signal. So stepping into it very carefully. But I don't think we're looking for shorts just yet on natural gas. Not just yet. No, I think there's enough to just stay out of shorts and just stay neutral. I'm not saying we're going long right now either. It's just more of a neutral than a short, whereas crude oil is looking far weaker. And it's interesting to see those two energy commodities diverge in their price. Roberto's asking for a look at the VIX. So I'm going to head back here and head over here where my VIX lives. This is a weekly chart. I like to sort of zoom out a little bit on the VIX and see where it is based upon historical norms. And look, it's interesting to see that it is moving higher. There's no surprise there, but for me, and this candle is still active because we've only got a Wednesday candle. So today's Thursday, if I'm not mistaken. So we've had the Wednesday candle. We'll still have a Thursday and Friday candle to complete that weekly picture. But the upper shadow and even the shadow from the week before is kind of, well, we're nervous, but we're still not believing that the worst case scenario is out there, that this is as bad as potentially the GFC. That you mentioned the words banking crisis. You mentioned the words, or you say the words, 3 banks have collapsed in the last couple of weeks, and that will no doubt send shockwaves and shudders through the markets, and that's what we've seen. But I think markets are understanding that each time is a little bit different, and so far I think there have been very specific circumstances surrounding the collapses that we've seen, even if you look at something like CreditSuisse as well. And I think that chart's probably worth having a quick look at just now, just saying that CSGN, which we're looking at the Swiss market here. And I did post a tweet last night as I was looking at this in the evening time over here in Perth, and there were plenty of alarmists, in the Twitterverse, banging the desk and saying Credit Suisse is going under, and that's going to be the end of the financial system. And well, I put to you that Credit Suisse has been going under for about 13 years, and the entire financial system ex Credit Suisse knows that, and they've been adjusting their risk accordingly. And I would say there'd be very, very little fallout from a Credit Suisse collapse, because their counterparties and their peers have all had a long time to know that's been on the cards. So if you're wondering whether that's going to be the next domino that pushes the next domino, I would suggest don't believe the alarmists on that. Okay, but hey, I could be wrong too. Let us look for Damien at Bitcoin. Absolutely, I'd love to look at Bitcoin. I'm going to change my watch list here over to my crypto watch list, and we're going to head down to BTC USD. Been super impressed, super relieved, Damien. To be honest, I thought we were in big trouble down there, but 20,000 as the US dollar came off. I think that helped as money flowed out of sort of traditional channels within the financial system. Bitcoin got a bit of a bid, and potentially with the malaise in this market since the low, there wasn't a lot of supply there to get in its way, at least until we overshot into this 26.5 probably thousand zone, 26.5. And that candle's not great, Damien. You know my style, you know what I like to see on the upside, you know what I don't like to see. And I don't like to see big shadows pointing up if I'm long something. I don't long Bitcoin, I do own Bitcoin. Why did that long shadow manifest itself there? Because we should expect to see supply in and around anywhere you've had in the past previous points of supply. And we look at this area in the past, just above 25, I think it's 25.3-ish. That's where I'm going to go 25.300, give or take. I can check for you exactly, just pretty much. That was an old point of supply. The old text there we go, the old point of supply. And we expect that the old points of supply, if I can get rid of this tool, I might have done it, there we go. And I will utilize these in a second. If I get that, POS, old points of supply tend to act as future points of supply. We don't know they will until we see how the price action reacts at that level. And really, this candle here is confirming for us that the supply at that level continues to linger. And what's very interesting about that 25.300 level is if I zoom out a little bit and go back, we're going to find another key level over here. And if I check that high, we can see that it's around about, I have to go to a slightly different list here, get my, that high there, 25.207. So you can see that that supply from that point is still nagging away in the system, and they can last for many, many months, those points of supply. So not all is lost for us true believers, Damien, us hodlers, but we need to see that supply worked through. We need to see it eliminated. Okay, so that is effectively Bitcoin, and the demand is US dollars, is fiat looking to get into Bitcoin. So we need to get through these sellers, and the only way to do it is to trade with them, and that is to literally give them US dollars. And as people come in, as that process occurs, and you have people transacting in and around this zone, removing that supply is locked up, increasingly locked up, increasingly locked up, increasingly locked up by this demand, okay? And you've got to think about, if you are getting set around that 25,000 level, what does a profit represent to you? A profit is no longer 25,000, and you're not impressed by 26, but you look up, and your natural instinct is to say, well, and not all people think like this, but many will. They'll think, well, if I'm in at 25, what would be a great profit would be 30,000. Okay, and this is where those round numbers come into play. But if you can lock up that supply, once you've taken it out, the demand or the holders that remain, I would say, no, that's not the right thing I want to say, the supply that remains, okay, because it's people who've given US dollars to obtain that Bitcoin, they are now latent supply. But what I'm saying to you is that supply is probably not going to come out for a ways to go, okay? And, you know, this is why breakouts work. Breakouts work because you absorb and remove the supply at a particular psychological level, turning it into effectively latent supply at a much higher level. So the demand that comes into the breakout, technical analysis buying, FOMO, fear of missing out, massive component of buying breakouts, is meeting effectively a supply vacuum until you get to the next psychological level where the demand from this level that got it right is looking to become supply again at some stage in the future. But long story short, Damien, these candles suggest we've got at least time for a pause here while we work through that supply. We want to see the white candles. We want to see the lower shadows. We want to see persistence in and around this area between 24 and 25,000. We want to see it break down and question people's confidence. Oh, is this the beginning of the end again? We want to see it hang up there, rock solid, so that FOMO, that anticipation builds, and eventually that demand comes into the market to cause the next price increase. Okay, let's have a look at the next one for Hanelli, which is USDJPY. Going to change watch lists here and head over here. Indices, bonds. Where's futures? It's in futures, I think. There we go. Click the wrong list. Futures. I should put futures in Forex because we've got Forex in here. USDJPY, and we're going to go down to the bottom of the list now. And if you're not sure why it's not the JPY USD, it's just convention. It's just what we do. We put the US dollar first in this instance, but not first in other instances. That's why we traditionally would look at the AUD USD, not the USD AUD. Okay, let's reset that, head back to my default zoom, get a big picture of what's going on, because I want to see what those long-term trends are doing through my traffic light system. And traffic light system suggesting amber here, isn't it? Which is, we're not really sure. We're kind of vibrating around that long-term trend zone. Recent candles would suggest that, and again, we have been talking about the US dollar index. We knew that it's not on this screen, but 105, 106 was a pressure point. I didn't foresee the banking collapse. It just turned out that way. And we've moved down from that 105, 106, which is dragging the US dollar down against the Japanese yen. Japanese yen tends to be the next reserve currency, global reserve currency. So it's no surprise that it would get a bid side. I think, Hanelli, there is room for a further push to the downside here. So we can look at an area sort of, I've missed it, but I'll move that in a second. So obviously through there, and then through there. Those they'll change in a second as I realign them. So that I'm going, the absolute trough lows are the ones that are important to me. So I think we can see a push down, certainly to 130. We might see an overshooting to 128 or slightly lower than that. But the candles are setting up for me, if I'm looking at these candles specifically through here, the feebleness of the rally through here. And really, I think I'm just waiting now for the break of that trough low, which I'll give it to you in a second, is at that low there, which is 132.28 or lower. I think we're going to get another push down. Whether you can make the reward to risk, that's up to you. So what we're saying here is potentially with a stop loss set above this peak here, which is not what I want to do. Let's go. I'm not an expert on drawing. Unfortunately here, I would have thought trend line would not extend. Ray looks like an extension. Let me do it a different way. Let's say stop loss sort of just above there. Above. It's not letting me move it for whatever reason. I'm going to give up pretty soon. It's another way to do it. Yep, that's not. There we go. There we go. Okay, so stop loss somewhere in that zone, and your target then coming in somewhere around this zone here, right? Whether you're going to make your reward to risk. But there might be other ways, other peaks that you can use if you want to go to a lower periodicity, and you might go to a 4-hour periodicity, and maybe potentially then you can, I'm not saying this is always the best way to go, but just pick a periodicity and stick to it. I'm not suggesting you try and make a trade out of going to another periodicity, but you can see here, if you can be consistent with a periodicity in the shorter or lower periodicities, you're going to find other peaks and troughs that you just can't see in the higher ones. And what that can do is potentially facilitate a trade through reward to risk by saying that, well, my stop now, so if my entries sort of are just on the break beneath this red line here, my reward to risk is now at least 1-to-1 into that zone. Okay, but pick a periodicity and be consistent with it. So you're checking it every 4 hours. And that might not be conducive to getting sleep at night. Certainly a 1-hour chart isn't. A daily chart is. You can check that just once a day. Okay, but my bias there is in the short term to the short side. In the long term, it's very flat, isn't it, Nelly? Okay, let's have a look. One from Jesse here asking for an opinion on gold. Let's head over. Might do gold. We'll check the spot price first. So if I head up into my precious metals, which is down here, you can see it's a 4-hour chart. And again, I'm happy to look at any periodicity in these sessions you require, but I tend to look at the daily. That's my personal trading style. But if you want something else, let me know. So I just wanted to see what the actual current market is doing. I'm just going to head back here, Jesse, just because I've got all my scratchings on gold here. So rather than grapple with the TradeView window and its drawing tools, I'd rather just use my my own Amy Broker drawings. Last night's candle was, wow, that's super interesting. We know it's obviously pushing down in the current time zone, but it's super indecision. So that candle there is the market saying, I'm really not sure which way I want to go. Don't do anything right now, but watch the next candle. That's exactly what that candle is saying. I've got no idea. Hey, I opened here. So if you look at where we opened on this one, that's our open. In there, I might just change the color of that so it's something we can see better. And say, if I get it nice and close, that's our open. I don't know whether we went up or down during the session. I'm going to suggest, based upon what the NASDAQ did, I'd say we went up. Don't know. It's hard to say. Maybe we went up to the high. Maybe we went down to the low. But either way, you can just see how uncertain the market is. And that's where we closed up the top there. And if the market can't decide, why should you be able to decide? So it's saying be really careful, especially after you've had a nice run, and wait for the next candle. The next candle is a really good indication of where to go next. So if we see the black candle in the next one, and that is going to be something potentially, I won't draw it there because I don't want to confuse the issue, but if we see something that looks like this, or we see something that looks like this on this next candle, and it will be officially the Thursday candle. Okay, so either of those, that's going to be a bearish indication for gold to potentially come back through possibly 1891, I would expect, and then even back into lower retracements, probably targeting that peak there. That high is 1858. However, if we get the opposite of these two on this Thursday candle, and that's going to look like this, or its buddy, which looks like this. Bear with me, there we go. Then you would be looking for a continuation into the peak here at 1960. Okay, so if you're new to my trading webinars, we call these our supply side candles, or our supply buddies. They are the manifestation of excess supply in the market. And over here, we've got our demand side candles, or our demand buddies. And I call them buddies because you tend to see them occur together. You tend to see them occurring in clusters. And the more they do cluster together, the stronger the signal you have that either supply on the left or demand is exerting its impact, its power on the market. There are so many Japanese candlesticks out there, candlestick patterns, I should say, but these are really the only two things you need to know about Japanese candlesticks. You can actually throw away. Tear out, if you find the 2 or the 4 pages that have those things, keep those pages, literally tear out the rest of the pages because they're actually irrelevant. They can be blended into either of those 2 forms. Okay, let me check sorry for you Zoom streamers out there, I've been neglecting you. GTII from Jay, that's tomorrow, Jay. So tune in for the session tomorrow on US equities, but Jay's also asking about the BNKU, which is something I will look at today because it's an index. So if I go BNKU, we can see MicroSectors, US big banks, 3-time leveraged exchange traded note. I'm guessing that's the one you're after there, Jay. So I'll click on that. we can see that this is clearly a long banking sector product. How do I know that? Because it's collapsed over the last few days. It's halved in value. Maybe Jay's thinking, are there any signs of a turnaround, of an opportunity to, described it before, kamikaze trade this one? Jay, straight out, this is not my trading style. I do not like to pick bottoms. I just feel that on the odd occasion that you do get them right, you tend to earn far less than on the multiple occasions you tend to get them wrong and things keep going down. What you need to look out for, Jay, is very simple. You can't see what I'm talking about, but you can now. So that's the MicroSectors US Big Banks Index, 3 times leveraged exchange traded note. You can see the collapse there on the back of what's occurred over the last few days. And for Jay, are we finding any signs to buy? And I'll just go back here very quickly and say, no, not until you see those demand side buddies pop in. And until I saw those, I think it's foolish to try and pick a bottom here. Could you be shorting that? Yeah, I think you could. You might want to wait for some of the supply side buddies first. But no, I can't call that a buy at this stage. From Nat, hi Carl, can you share your trading view chart configuration? Well, I'm not sure I can share it so much as saying that you can see what I've created on screen. This here is the average true range, 1 period, Nat. So that's not hard to just find the average true range on TradingView in the indicators list, but I use 1 period, and that's very curious for some people. I say, that doesn't make any sense. Why would you use a 1 period ATR? The industry standard is 14. Don't you want to average that out over a period of time? And I say, well, don't you ever just take anything for given, for granted. Think about it. What an average does is dumb things down. It slows things down. Now, there are benefits of that. We don't jump at shadows. But it also will shroud, cloud, obfuscate what the shorter term volatility is doing. And that's really what I'm looking at here. It's a trading methodology I use which matches up price action, volume and volatility to spot major turning points in the markets. And I need the sensitivity of a 1 period ATR to do that. So if I was to see some significant demand side buddies here and seeing the substantial influx of volatility and volume, it would actually give me more confidence for J that there is a kamikaze long trade in there. And yes, the volatility's there, the volume's there, because these blue bars are the volume for you, Nat, but the price action hasn't confirmed yet. So that's the final piece of the puzzle to spotting what could be a major low in the market. Now, the only thing you'll be missing, Nat, are my moving average ribbons. And even then you can recreate those. The short-term ribbons are the 21 and 34 exponential moving averages. Nothing special going on there. And then the 144 and 233 exponential moving averages. Why those periods? Just the ones I found that work the best over the most products, over the most securities, markets. And I think if you watch me for any period of time, you're going to find that that's the case too. And they happen to be Fibonacci numbers, just pure coincidence. And the thing about Fibonacci, I don't necessarily believe there's any validity in it myself, but if other people do believe there's validity and they're trading around those numbers or they're using those in their proprietary algorithmic trading models, then sometimes it becomes self-reinforcing. Okay, and my view anyway is just find what works and keep using it. And I find these work. Now, the only thing you won't have there, Nat, is the traffic light system where they're changing from green, red and orange, and that is proprietary, and no, I'm not sharing that one. Jay saying that he bought into BNKU today at 1535. Okay, well, it's a pure speculation there, Jay. I wouldn't call it a trade necessarily. It's just pure speculation. I don't think there's anything in the price action to suggest that it's going to bounce, and I could be wrong, but just balance of probabilities. The supply looks very much in control of that price, but all the best with it, and I hope you get it right. You know, that doesn't, just because I don't think it's going up doesn't mean it won't. Okay, let's go to Perry. And Perry wants to talk about the GBPNZD. Now, that's a little bit of an obscure pair, isn't it? And in fact, it's so obscure, I didn't even bother to add it to my watch list, Perry. Doesn't mean there isn't a trade there. So let's go GBPNZD. And I'm not allowed to pick any of those top ones because they're competitors. But in the interest of doing that and not trying to find the actual one I can pick, let's just pick that one and say with a big grin that it looks fine actually to go up. There's some appreciation there. Geez, it's slow and steady, isn't it? As in, you probably would find it more satisfying to pull out your nostril hairs one by one, I think, if you were to go along this pair. Because, yeah, the short-term uptrend is there, and it has actually shown signs it's turning that long-term trend back to up by breaking through it, testing it. But, yeah, I think you've got a clear choice between going long here and pulling out those nostril hairs. But that's your choice. Some people love pain. Barry's looking for the FTSE was going gangbusters, wasn't it? It was absolutely blitzing it. And then the banking thing happened, didn't it? So let's head over here to the FTSE. Let's see if there are any trades on this one. FT 100, there we go. Ouch. Yep. Don't know. It's got to be that CreditSuisse thing, but it wasn't just CreditSuisse. So it's BNP and Societe Generale. They were down 10%. That's not a good look. Yeah, would I be going for the kamikaze long here? Absolutely not. Not with a candle that convincing. I mean, that is, you've got to remember when stuff goes down a lot, right? What most people, the natural response from the average punter, not from me, right? Because I've had to retune my brain over many years to think the opposite of the average punter. Think about that statement for a second. Why did Carl retune his brain to think the opposite of the average punter? Why do you think that's important? But what normally happens when stuff comes down like that, the natural response from the human organism is to say, wow, didn't expect that. My brain can't comprehend that. Was much more last week. Therefore, it must be cheap. Okay. Pilot must be cheap. This thing, look, it has to go back up eventually. Right? Right. Surely I can't lose. If I hold on long enough, this thing will go back up. Maybe, probably. I don't know, because I don't know what's going to happen next. But what I do know is that stuff only goes down like that, A, if there's a bunch of supply in the market, and that supply is done either good research or bad research, or it don't matter, but they're getting the hell out. And B, there's no demand. There's no money that's saying, you know what, I'm going to take the other side of that trade. Yeah, I want this risk right now. You know what, you got more risk? Yep, give me some more risk. I'm piling up on risk. Give me all the risk you can get. But the demand side's not doing that. The demand side's saying, no, I'm getting out of the way of this. You need to drop your price, right? And the supply is so desperate to get out, they're willing to drop their price more and more and more. And even though they're dropping their price desperately, the demand is still running away, saying, no, I'm still not ready yet. Still not at a level where I'm prepared to step in. So I look at a chart like that and say, well, supply is convinced there's a good reason to be out of risk. Demand is convinced there's a good reason to be out of risk. I think I've just convinced myself I need to be out of risk. And yet the average punter looks at that and says, I need to take some risk here. I think there's a big disconnect between the average punter's view of a chart like that and what's actually happening. Now, how does demand manifest itself in the system? Let me draw you another arrow. So this is how demand manifests itself in the system. This is how supply or the withdrawal of supply or the dissipation of supply manifests itself in the system. With that candle there, that's that lower shadow. That is panic supply in the morning. That is, yes, demand getting out of the way for some element of that supply, but then stepping in and saying, this is the price. You've had to drop your price day after day after day, but this has hit a level now where that risk to me looks enticing. And therefore, I'll increase my demand into the system. So much so, it'll overwhelm the supply that is around to close that with a long lower shadow and a white body close near the high of the session. Okay, so my suggestion to Jay in terms of, well, do you try and pick that bottom, is at least wait for a candle like that before you do, okay? And often you don't have to give up a whole lot because net change from the day before, you can see that was very little. The other big manifestation of demand is your big white candle, and that's where you are giving up quite a bit of price, aren't you, to get in. So they are literally the one I'm drawing there is my favorite candle, okay? We need to unwire or rewire our brains from something is much cheaper than it was last week. I always use the analogy of a pineapple because I love pineapples, okay? I like making pina coladas. And if pineapples were $4 last week and you go to the supermarket and they're 50 cents this week, you're going to buy a bunch of pineapples, right? Because they're cheap, and chances are they probably will go back up to $4. They might not, but who cares? Pina coladas are great, right? Stocks, bonds, indices, crypto, they're not bloody pineapples, okay? Just because they're 50 cents now doesn't make them cheap. There's no sense of cheap or expensive in market. There's just, do I want risk today, or do I want more risk today, or do I want less risk today? Stop thinking in terms of price. Stop fixating on the price and just look at the patterns, the signals, the supply and demand, and say, does the market want risk today, more risk today? Does the market want less risk today? And therefore, do I want more risk today, or do I want less risk today? Get that right, you're going to be a better trader. Let's have a look. Jay's off to bed. I don't know, but I'm guessing Jay is tuning in from the US. And I'd love to have more people tuning in from the States. That'd be great. But I've answered all of your questions and hopefully a little bit more. Hopefully we've done some of that education and just, dare I say, my role here, a little bit of mentorship as well. Hopefully I can help you out with that. Okay, if you'd like help with other aspects of your trading and investing, we have other webinars that we run. If you like your ASX shares, tune in on Tuesdays at 1 p.m. for the ASX edition of Live Market Analysis. Obviously, you know what you're doing today. Thursdays, you get the macro. And then on Fridays, we have a look at those US shares. And maybe a few people thinking, well, I don't need to bother about US shares. I'm more focused on what I'm doing in Australia right now, protecting my portfolio, whatever it is. But I do think in terms of global share markets, it is the place you have to have some capital invested, especially if we kick off the next bull market, because nobody does bull markets. Nobody does capitalism like the Yanks. Fundamentals and technicals, learn how to trade. Register at www.thinkmarkets.com/AU webinar for anybody watching on the stream. If you're not a client of ThinkMarkets, well, I think you should be, because we are the good guys in the Australian broking scene. We do your $8 flat rate chess trades for your self-managed super fund. But if you want to get a little bit funky, get into some of those commodities, the cryptos, the futures, trading US shares. You can do it without CFD product and commission free on all of those products. Fantastic. Award-winning broker. We keep winning the awards because we're big, we're well capitalized. Hey, didn't Silicon Valley Bank say that? But we do keep winning those awards. We've got the best platforms, and we have dedicated account managers as well. So you don't have to muck around with those chatbots where you're going, hey, can't do that withdrawal, or don't know how to fire this instrument, and the chatbot says toast, right? Because the AI's got on the fritz. Give us a call and talk to us. Apart from that, if you're watching me on any of the streaming channels, hit the subscribe button to stay notified of any time I go live. And please, 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 very important, you hit the like button to let you know you like what I'm doing. Hey, tell your friends to come on board as well. That'd be great. Apart from that, it's been a pleasure chatting with you today. All the best for your trading and investing. Till we catch up again. Bye-bye for now. But before you do leave, don't forget that everything we talked about today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general information, consider it carefully or seek the help of a financial professional. You can learn more about ThinkMarkets and our products by downloading our product disclosure statement, our PDS, from our website.